Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we are going to be analysing the NASDAQ 100. Now I did a video last night, but I've woken up this morning and I've seen the NASDAQ 100 to continue to fall here, and I thought that it's a great opportunity now for me to actually get on and film a video and post it on YouTube, because I'm sure there's a lot of investors out there currently scratching their heads thinking, what do I do here? We are still falling here for the NASDAQ 100. And yesterday I explained how important this area is here, and the reason being is because it marks the bottom of the C leg. So initially I thought that we could have been trading within this ABC correction pattern, but if we do wipe out the bottom of this C leg, which is down at around 13,050, then that is very, very bad news for the NASDAQ 100, and that kind of just takes the ABC out the picture. But at this moment in time, we are still trading within this ABC, give or take. We're about 100 points away from taking out the bottom of that C leg. I think what the market's kind of waiting for right now is some positive news headline. Even if it's another ceasefire, for example, we just need something. The market needs something. But that being said, I was trying to think to myself last night after actually posting a video on YouTube. Is all of this, well, I say all of this, since the Russian invasion occurred, is all of this, so I think so since Russia actually did invade into Ukraine, we have fallen 15%. Have the markets fallen just because of the Russian invasion, or are they just using the Russian invasion as a disguise so that we can obviously correct ourselves after the Fed basically coming out and saying that they will have to aggressively rate interest rates over the next 12 to 24 months? The answer to that question is I do not know, but what I do know is that the market now is in a bear market territory. We have fallen from those highs. We're currently down around 22%, so anything below 20% of course is bear market territory. So it's very, very worrying time for many investors out there here trading the NASDAQ 100. I'm going to be perfectly honest, I bought the NASDAQ 100 last week at around 14,000. I think I bought it on Friday, so roughly this area here, and at this moment in time I am in a loss. But one thing that I really want to make clear to most investors out there, especially if you're new, please do not be adding to a dip here. Do not be adding, do not try cherry pick the bottom. What I've done, I've opened a very, very small position here for the NASDAQ 100, and as it falls, I'm just going to be waiting patiently, because I do know eventually we will see that bounce where it then trades back into profit. Of course, I do have a stop loss down around in this area here, because if we did break below the C leg, that would be not good news at all for the NASDAQ 100. And as I was mentioning yesterday, that could even lead to a move all the way down to 11,700 area. Why 11,700? Because that is the Fibonacci extension, the 1.618 from those March lows in 2020. I just got that fib retracement all the way down to those March lows, and of course that that 1.61 fib level is all the way up at 11,700, but hopefully we do not get there. But I just wanted to come onto YouTube and just make it clear that at this moment in time, please do not be trying to add and add and add on the dip, because if you would have used that strategy since the highs here for the NASDAQ 100, you would have lost a significant amount of money. And I'm pretty confident that there's probably a lot of retail traders out there at this moment in time who've already blown their accounts on several occasions so far in the past 2 months, and it's really, really tough out there. It's really hard to kind of forecast where the markets could be heading next. It's certainly one of the toughest and most challenging periods I've ever been a trader, because we haven't just got a hiking interest rate environment, which is normally very, very volatile in itself, but we've also got the potential of World War III, and that does sound really serious, but it is serious, right? What's happening right now is very, very worrying, and it's incredibly difficult to kind of forecast the markets. We've also got inflation going through the roof. There's even analysts out there now speaking about hyperinflation depression, where basically the cost of living just goes through the roof, and and then with things like what we own, like assets, like stocks, for example, which are basically decreasing in value, and that's exactly what is happening right now. So I really hope that the inflation picture does come under control. But of course, one way to typically battle inflation is to hike interest rates, but the Fed isn't going to go and hike interest rates when you have the price of oil, for example, surging, and we've got this going on with regards to Ukraine and Russia, so it's not the perfect environment to be hiking interest rates. So the Fed really has their work cut out, and I'm not going to lie to you guys, I personally do believe we are going to see lots of volatility over the upcoming weeks. I see no sign of Russia backing down anytime soon. When I say volatility, do I mean it's just going to go down? No, that's not what I'm trying to say. We could see a nice little jump up higher, but then ultimately we could easily just pair those gains, just like we've seen on 2 or 3 previous occasions, like that, for example. So, please be trading very, very small. Do not be trying to add the dip, buy on the dip, because that strategy will not work well for you, okay? If you have bought up here, of course, I hope that you have entered with a very small position. As I have been saying over the past couple of weeks, please do trade really, really small here, because the markets are so volatile and hard to navigate. But if you have done what I've done, for example, and opened up at these high levels, please just be patient and wait for that rebound. You kind of got to ask yourself, why are investors selling their stocks right now? Why? Just because what's happening in Ukraine and Russia right now, does that mean that Microsoft should be worth 20% less than what it was this time 2 weeks ago? No, personally, I don't believe so. Just because what's happening in Russia right now and Ukraine, does that mean that people in US, for example, and UK are going to stop ordering parcels from Amazon? No. Okay, of course there are other factors for certain companies, but all in all, I think, especially with the NASDAQ 100, the biggest tech names, I don't think that their businesses will be as affected as what the markets are currently showing right now. So, perhaps we are just going to oversell here, and then we might rebound here with a overbuying overbuying behavior, but of course time will tell. But I just wanted to come onto YouTube today as we are approaching this very, very key stage here in the NASDAQ 100, just to let all retail investors know to please be careful and do not continue buying the dip. Just let the market play out. If we bounce at here, that's fantastic. Still do not buy any in this area here. Honestly, wait until we're back above 14,500, back above 15,000. But if we do take out this low here, which we achieved on the 24th February 2022, it may not get very pretty, and we might see a much faster fall towards the downside. But one positive thing is that the RSI is approaching the oversold territory. 32 is the current level on the RSI. For those who don't know, anything under the level 30 tells us that we are in fact oversold, and you should see some investors come back in and buy the market. S&P 500 is looking very similar as well. We are approaching that February 24th low here for the S&P 500. RSI is a little bit higher than the NASDAQ 100, up at around 34.20. But at this moment in time, the market is still in a downtrend, and it's not until we can break above this downtrend line, which of course at this moment in time is pretty much all the way up at around 14,000. It's not until then when you can start to say, well, hang on a minute, now we are starting to potentially look a little bit bullish.